Things are moving fast in India's financial world. I mean, there are new rules, big market shifts, and global events shaking up the economy pretty much constantly. So in this explainer, we're going to break down the biggest financial updates from March 2026. We'll help you get a handle on what's happening and, more importantly, why it actually matters to you. So let's dive right in. We've combed through 18 major developments and boiled them down into 5 key areas. We're going to start with the new regulations, then jump to market safety and global impacts, then see how this all hits your wallet, and we'll wrap up with a look at the big picture economy. First up, let's talk about how India's top financial watchdogs are rewriting the rulebook for lending and for the currency markets. Okay, a really big move we're seeing is from the RBI. They've got new guidelines for real estate financing. And the main goal here, to make sure developers have more skin in the game, a real financial stake in their own projects, to stop them from playing fast and loose with funds. And just so we're all on the same page, when we say RBI, we're talking about the Reserve Bank of India. It's the country's central bank, the one that sets monetary policy and basically keeps an eye on the whole banking system. So, what do these new rules actually mean? Well, for one, developers have to keep a steady debt-to-equity ratio all the way through a project. And get this, no more extra loans halfway through. It's all about forcing some serious financial discipline on everyone, from the big traditional banks to those non-banking financial companies, or NBFCs. Speaking of discipline, it's also changing how NBFCs report their data. These lenders now have to send borrower info to credit bureaus every single week. That is a huge change from the old monthly system, and it's meant to stop people from taking out a bunch of loans from different places before their credit report can catch up. So, what exactly is an NBFC? Well, think of a company that acts a lot like a bank, offering loans and other financial services, but doesn't actually have a banking license. You've definitely heard of the big ones, like Bajaj Finance or HDB Financial Services. The RBI is also stepping in to try and stabilize the rupee. To do this, they're putting a daily cap on how much currency exposure banks can have. The whole idea is to clamp down on too much speculation in the currency market. This new limit is on something called the net open position, or NOP. So what on earth is that? It's basically the difference between a bank's assets and its debts in a foreign currency. So if a bank thinks the US dollar is going to go up, it might hold a ton of dollars. The NOP is a measure of that bet. And now, the RBI is putting a lid on it. All right, let's switch gears and talk about the stock market. We're going to look at how SEBI, the market regulator, is rolling out new measures to make investing safer for all of us. First off, SEBI, that's the Securities and Exchange Board of India, is going after portfolio overlap. The point is to make sure that when you invest in 2 different mutual funds from the same company, you aren't just buying the exact same stocks twice under different fancy names. So, they brought in a new rule that says the overlap between 2 funds from the same fund house can't be more than 50%. But here's the kicker. It turns out this rule will only affect less than 2% of existing funds. That kind of suggests most of them were already different enough to begin with. SEBI has been really busy on the enforcement side, too. They just penalized 18 people for manipulating stock prices. Plus, they launched a verified app label to help you spot fake trading apps, and they're even looking at making power of attorney rules easier for incapacitated investors to manage their accounts. Okay, let's zoom out a bit. Because, no economy is an island. We're going to look at how some major global events are sending ripples, and frankly, some waves, through India's markets. Growing tensions out in West Asia triggered a massive chain reaction. We saw Brent crude oil prices spike to over $119 a barrel. The rupee fell to an all-time low against the US dollar, and the Sensex had its biggest single-day drop since 2024, a real market plunge. So to help businesses weather this storm, the RBI has offered a bit of a lifeline. They've given exporters more time to bring their foreign earnings back home. The deadline has been pushed from 9 months all the way to 15 months, which gives them a lot more breathing room in a really volatile market. Now, all this big market news can feel a little distant, right? But it often has a direct impact on our own money. So let's zoom in and look at the shifts you might be seeing in your own wallet. If you've taken out a loan for something like a new phone or a TV recently, chances are it came from an NBFC. They now completely dominate this space, accounting for a staggering 83% of all consumer durable loans in India. Meanwhile, private banks' share has shrunk down to just 14%. Now let's talk about something super important, security. The RBI has proposed some new rules to protect you from digital fraud. If you're a victim, you have to report it within 5 days. If you do, you could get back up to 85% of what you lost with a cap of 25,000 rupees. But, and this is crucial, it's a one-time in a lifetime deal. And what about payments? Well, India's UPI system, the magic behind apps like Google Pay and PhonePe, has been a complete game changer. But its next big goal, reaching 1 billion users, is proving to be a tough nut to crack. Growth has started to slow down after that initial explosion in popularity. For our final section, let's pull the lens all the way back and look at the big, foundational pillars of the economy. Okay, here's a rapid-fire look at the macro landscape. The government is sticking to its 4% inflation target. The RBI set the government's short-term borrowing limit, it's called Ways and Means Advances, at 2.5 lakh crore rupees. Regulators are also cutting fees to encourage investment, and there's a new campaign to get everyone up to speed on the new Income Tax Act. So when you put it all together, we've seen regulators stepping in everywhere, from real estate and mutual funds to the apps on our phones. And while the goal is obviously to make everything more secure and stable, it leaves us with a big question to chew on. Is our financial world actually getting safer, or is it just getting a whole lot more complicated?